All right, hello traders. Good morning and welcome to this live intraday strategy webinar. Today is Tuesday, March 31st. Michael Boutros with you this morning. Great to be with you guys. Peter, DJ, Jay, we got Michael in the house, Pete and Sarub. Great to see you guys this morning. Hey, Aurelian. So it's the last day of the month. It's the last day of the quarter. I can't stress enough how much I have discontent for trading in these conditions. Over the years, it just typically is not a very conducive trading environment. A lot of rebalancing, end of quarter, essentially even exacerbating the end of month flows that we always worry about. So look, if you're not in any positioning, it's not a bad time to kind of stand on the sidelines, get your setups ready, have the levels marked and ready to go. There is opportunity, but I just want to caution everyone, really take it easy, okay? A lot of stuff going on essentially in addition to the end of month flows and of quarter flows. And you could see some wicked price action that'll really mess with you. So that being said, let's delve right in. We got the DXY, Euro, Sterling, Dollar, Yen, Gold, Dollar, CAD, Aussie, SPX, I got you on that, Pete, and Dollar Swiss, which is currently testing near-term slope resistance. Any other questions or trade setups, feel free. Sarub, great to see you, sir. Silver, crude, and Dow. Silver, crude, Dow. All right, so I'll tell you right now my opinions on two of these. Crude, you don't really want to mess with. I still think you can get a little bit lower. I don't only have weekly charts on that, but we'll take a look. Silver seems a little bit more volatile. You can get some play there. And Dow, I don't have anything set up, but we can always throw something together. So let's jump right in. Here's DXY. And here's what the DXY looked like earlier in the week. As we were starting ahead of the Sunday open, we were highlighting this key support zone, okay? 97, 87, 97, 83, 618 retracement confluence with the 2018 highs. You had slope support. We were looking for a dip, exhaustion into the zone, near-term resistance, key resistance, and bearish invalidation, 99, 91. You also had the uncovered close, which is a decent pivot, just higher at 99.98. Look where this thing is trading right now. Here's the weekly chart look like into the start of the week. Here we are now. Okay, so we simply held that low, didn't go much lower into the open, and here's the test of resistance so far, 99.98. The high registered at 99.95. So no changes, okay? We're at like max where we would want the DXY if this is still heading lower. Here's what the daily chart looks like. Here's what the intraday looks like. Okay, same levels. The only difference here is I added the uncovered close. That's just above this 99.91, 99.98. But you can see the slope is just higher, basic channel. You know, you could probe a little higher, but essentially looking for some exhaustion up here if this is going to hold. It's the end of the month. Again, I don't trust price action for a dime in this market environment. So if you're going to hear a lot of hesitation in my voice today, guys, it's just because this is just not when I shine, right? So I want to make sure I'm staying as nimble as possible. End of month flows, I could easily see this thing ripping through here, faking everyone out, and then failing again. Who knows? All things held constant, ideal scenario. You see failure into that parallel. Downside key support is still going to be 97.84, 97.87. Yearly open support, Fibonacci comes down lower, right there. So not much to write home about with DXY. Looking for exhaustion here if this is going to work. Any questions on dollar? Okay. So obviously we take a quick look at usually at the euro right after this, just to kind of give us a sense of where things are there. Here's the euro weekly. Again, that key support. We talked about this yesterday in the webinar on daily effects if you were with me. Here's the recovery. Key resistance 1166, 1186. Again, a confluence of 618 retracements and former slope resistance. Nice pivot. Weekly close. That's what's got to matter is resistance. Support. Here's the low week close from last year. I want to see this respected on a weekly close basis. Okay, if euro is heading higher. Intra-week, we could get a little bit lower. Here's what euro looks like first on the daily. Okay, here's what it looked like into the start of the week. Looking at resistance zone right there, we were looking for pump sort of exhaustion into this zone, then a pullback. Didn't get it, right? Just got the pullback. So here's the pullback, first level, second level. On an intraday basis, 109.72 would even change things. 108, I'm sorry, 108.97, the 2019 close low is what would change things on the intraday charts. Here's what it looks like here. So there's 109, 108.97, right there, right? So right now we're testing a break of Friday's low. We're testing a break of the low week close. We're testing a break of upslope support. Might be some more downside here on euro. Okay, ideal scenario, intraday, guys, if this thing drops lower, you get some sort of response at 108.97. I need to see a daily close recovery back above 109.76 if this is going to be an exhaustion drop. All right. If we settle and close below this, you're looking at a simple break of upslope support. You're looking for a larger pullback. Hey man, no worries. Says continuous apologies. Hope I didn't miss the DX, didn't miss much on DXY. Hope it was okay with you. Not much. I can tell you right now, I'm not really excited. Hey man, I just want a whole spiel about end of quarter, end of month flows. Please keep that in mind while you're trading today and tomorrow into the open of the quarter. Just not our ideal time. But all things held constant, looking for resistance. If we get a little bit of a push higher into the open, but right into this formation, euro, you're looking for basically exhaustion ahead of 109, 108.97. I can't say that level for the life of me. If this is going to still hold uptrend. Okay, again, I find it very hard to trust any of the moves I see in this market environment. Heading into Wednesday, Thursday, we should be in a really good position right into the start of the first major event risk of the month, which is going to be non-farm payrolls. By the way, consensus estimates haven't really shifted or been updated since the massive weekly jobless claims that we got last week. So it's going to be interesting to see how big the deviation is on Friday. But right now, next 48 hours, keep the powder dry. So that's Euro and DXY 1 and 2. I'm going to take a quick segue here into last night's update. And that's covered sterling. So the thing with sterling, we've been following this like a hawk. Upside was a great breakout of that downtrend last week. Our levels were all taken out except for the 618. The last target we were looking at is 125.15. It's a 618 retracement of the drop. Post-Brexit low, we closed 24.33 is basically what we were holding yesterday. Here's what sterling looks like right now. Okay, and just a real quick look at sterling on the weekly chart. I know I showed you guys this yesterday, but the break and pop back above 22.78, that's sort of the level we want to see hold support on a weekly close basis. Again, this is the weekly chart, right? But you can see that was last year's low week close, major pivot on both sides, the way up and the way down. You have slope support in there and some down slope as well. I want to see that thing react, right? So we're trying to find some support in sterling. Intra-week, could we get a test of the low day close, 120.84? Possible, wouldn't be my ideal scenario, but basically looking for this thing to start to hold some support. So the pullback did hold the median line, which was encouraging last night. Okay, here's the update right here. We pulled right into it. You saw a pretty decent rebound, still holding slope. So for all intents and purposes, this thing has simply made a weekly opening range right below resistance. And while the weekly opening range high is 24.67, I would still reserve that 618, okay, at 25.15 as sort of your level to look for the breakout, right? That's the leg that would give us the next leg higher. Below this region, the advance could be susceptible for a little bit of a pullback here. So that's sort of my scenario with sterling. Again, we like it higher. It's been a pretty decent recovery, right? Major rip off that 100% extension. Nice follow through. We're looking for some support on the pullbacks here. As long as we stay within this near-term ascending formation, we should be okay. I was stoking this out this morning with a 60-minute chart, trying to see if there was a trigger to get in here. Didn't take it, but keep your eyes on sterling. All right, any questions on British pound? Okay, that is number 3. Next up, the abomination, dollar yen. Here's what this thing looks like. So, what can I say here? Here's where we were on dollar yen earlier in the week. The basic focus for me was this thing had set up opening range just below this critical resistance. The ideal scenario is for us to get a pop into one of these levels to short, to look for reaction. We're not quite getting much push through on the first level, which is 108.62. Okay, it's the 2020 objective yearly open, not my opinion, not Jamie's opinion. Fact, you have another pivot zone that we've been looking at 108.42 that goes way back. And you can just see, again, don't take my word for anything. You can see the pivots along this plane. Support, support, break, acceleration, resistance right into that zone. Support, pivot, right? Pivot. And here we are again. So I know we're on the long side on the swing trade. Sorry guys, bear with me one sec. I just some things are popping out at me here. Okay, further highlights that. All right. It's tricky on dollar yen right here. Look, ultimately, again, here's the dollar yen on the daily chart, right? Ultimately, this is the big stretch test of downtrend resistance pullback. Would have thought you get a little bit more on this swing, but ultimately a break below the monthly open, which is right here, 107.38. You're basically looking for a test of 106 again, right? That's the risk. So I have no exposure on this, just a disclaimer, gunshot approach. If it pulls back or if it breaks this uptrend, look for reaction now near 107.69 essentially. The monthly open 107.38. If any lower beyond that, and I think you risk a much bigger washout. All right. Top side still 109.68. That's kind of where I wanted this breakout to take us. But if this fails here, look for a break below monthly open support to kind of give the way to a bigger pullback in dollar yen. Any questions here? I was actually pretty excited on this into the start of the week for the rally into here. Once we pulled back and pushed back in, I lost my footing. I really didn't know. I don't know what to do with this right now. Again, ideally you get one more pump higher before the pullback, but if it breaks, it breaks. Questions on dollar yen? Here's a dollar yen weekly, by the way, not to keep this in focus of the levels that are playing. It's just ridiculous. Pretty clean considering it's dollar yen. All right. Number 4. That's number 5 is gold. I'm sorry. Yes. Here's what gold looks like. So upon review here, I think we're in for some chop. This is the gold weekly chart. We've all seen this one before. Here's what it looked like. Give you an update on this last night. Okay. Big zone of resistance is that former channel slope right here. All of these parallels, remember, are all derived off the 2018 advance. Nice pivot. Nice pivot. Even though we made a mess of that over the last couple of weeks, we just touched it again last week and pulled back. So you can envision a scenario, especially with everything that's going on right now, where you get some more sideways, lateral to lower action before you finally consolidate and make some sort of breakout. The larger picture is bullish. Immediately, I still think the risk is, again, for a pullback. Remember, I was saying that all up here for a while, and then it kind of kept on pushing. It took a couple of weeks. The pullback broke. It got all our targets, even the last one, before recovering. So yeah, on this rally, I still think, the risk is for more sideways to lower. Here's what it looks like on the daily chart. Okay. We were looking for a tag of 1649 before the pullback, didn't get it. Here's sort of the near-term range. Your monthly open, long-term 618 retracement, 1585, 1584. Ideal scenario, again, pistol to my head. If this rips higher, failure here for one last high, bigger correction, and then look for sort of reasserting alongside on a bigger pullback towards maybe 1552. But for me, I can't get excited, guys, about taking any long positions from these levels in gold, period. You could say the risk off all you want. You could say Corona off all you want. I just don't see it from a trading standpoint as a position opportunity. Here's what it looks like on the intraday. Look at this. This is the 60-minute, to be fair. So here's the 120. But if this is a break of the upslope we've been following off the lows, well, it's the break below 1585 that would validate that. We're sitting on former slope resistance. I'm not really a big fan of it here, guys. Again, if this is going to work, look for weekly resistance right here at 1617. That's where we opened the week, and it converges right now right on the former slope support. Downside break here, we kind of open up the decline. If this rallies, again, 1650 is where you'd want to see like max rally hold if we're moving lower. Beyond that, resumption targets are 1678 and 1713. Again, broadly speaking, it's a constructive trade, near term, looks like a possible 5-wave advance off the low, looks like a little consolidation here into the highs. The breakout not really getting fueled, right, with that type of move we want to see if there is going to be a cascade rally. So be cautious. If we get a pullback here, I think you look for support closer down to 1550s. Wouldn't really be interested in taking anything alongside unless we clear 1650 on a closed basis. I looked at near-term charts in the morning and gave me a headache. What Corona is doing to us these days. Yeah, Iman, I mean, well, first of all, the humanitarian effect, I can't step aside from that. Again, I know too many people who have been impacted by it. It's horrible, terrible situation. But look, from the market standpoint, there is going to be, I hate to say, again, I don't want to sound insensitive, but there's going to be a numbing effect, right? To the Corona news day-to-day impact on price action and sentiment. I thought we were going to get a bigger reaction after Sunday's announcement that we were expending the close for another 30 days. The biggest issue, again, that the markets are dealing with is that this is unprecedented. It's not a financial disruption. It's not a banking disruption or breakdown. It's sheer demand destruction. So that's all to say, yeah, the charts may be a little bit gnarly, but Iman, again, you came in a little bit later. I just want to stress again, the end of the month, end of quarter flows. I stand aside in this environment. I tend not to get aggressive. All right, so gold, possibility for near-term exhaustion, essentially while below 1650. Okay, look for the 1585 break to open up a larger decline. If that does happen, by the way, you want to tack on a fresh retracement of just the near-term stretch, and this is what it would look like if we get this break below this low. Just want to show you where the 618 comes in. Look at this. Yearly opens 1520, 618 is 1524. A 38.2 comes in right at that slope. So possible downside targets if we do see a break. You got 1569, 1570, let's call it. It's a $15 break if we get below this. And then 1550, huge lateral pivot in price, massive. We've been following this for some time. Key support, maybe even deeper near 1520, 1524. That's all contingent on a break below 1585 and a daily close. So watch that. Watch that. All right. Moving right along. Dollar CAD. Who's getting down with the loonie? Here's what it looks like on this thing. So we opened the week at downtrend support, right? And our kind of risk was for a little bit of recovery here. Here's what the Monday update looked like on dollar CAD, right? Here's what it looked like on Sunday. So we said, look, we're opening, or we closed last week right at downtrend support. If this is going to be a little bit more of a pivot type of, rebound, you got divergence into that low, right into the close of the week. Look for a recovery above this zone right here to kind of give you the breakout trade. In that zone, you look for 41.49 on the breakout and basic confluence slope resistance. Well, here it is. That ended up being the low. We gapped higher into the open, and go figure it. The gap held 40.14, 40.40, that same exact zone as support, not only into the open, but even on the pullback and test yesterday. So here's 41.48. 38.2 didn't exist here because we didn't have any conscience to put a retracement on that low once we got that breakout we did. So there's a 38.2. We talked about this yesterday. 42.06 got that taken out. Look for confluence resistance here. Looking for topside exhaustion. Again, it kind of matches with all the setups that we've been noting. You got the high week close at 43.36. You got the upper median line parallel of the pitchfork. You got former slope support turned resistance. Even if we get up as high as 43.36, looking for possible exhaustion on dollar CAD. And Eman, looking at a market like what we're in right now, and you look at the near-term charts and it just gets you a headache. I agree with you, but not all of them. This is where we got to know where to look and why it's not incumbent upon us to press trades on setups, guys, that just don't have the technical clarity. A trade like this or a setup like this, 43.36, 43.15, 43.20, anything in this zone. If you get some sort of reaction today, you get some sort of exhaustion, it's on point. Now, we did get some data earlier today with Canada GDP data, came in slightly weaker than expected. This is a month-on-month print, so it doesn't tend to be quite as impactful. Came in at 0.1%. We were expecting 0.2. Now, that's off a previous read of 0.3, so a little bit larger of a slide. Year on year, that puts you at 1.8% versus 1.9, which is what Canada sort of has been at. So perfect opportunity. So maybe some further CAD weakness, get this thing a little bit higher. The biggest problem, again, with any dollar CAD short is we keep going back to the oil trade, right? It's hard to get too emotionally bullish. Well, you don't want to get emotional ever, but you start sentiment. It's hard to turn the sentiment too bullish on CAD, bearish dollar CAD, as long as crude is in free fall. So Sarub, I promised you earlier, Sarab, I hope I'm pronouncing your name right. I will take a look at crude in the session, but for CAD, it's an interesting scenario on a stretch into 43. I'd be looking for a reaction there. Again, daily chart doesn't really have much to write home about, although you can't really be too surprised about the bounce off of up slope support, right? Not too surprised. I want to see failure ahead of 43.36. Okay, it's not only the high week close, it's also this massive candle. It wasn't a reversal day, it was sheer sell-off, the close of that session. And of course, dollar CAD in the weekly, there's 43.36 again. All right. Again, end of month, end of quarter. I'm going to drill it into your head the entire session. Don't want to mess up a great month. All right, Aussie, number 7. Here's what the Oz looks like. So weekly, you're still holding that 2008 low close, 61.96. That's what I want to see pivot above on a close basis to get the reaction, or to give us the validation rather, that a more significant low is registered this month. All things held constant, below 62. I don't know. This could be a simple break of support, test of near-term resistance, then move right off, in which case we would need this to hold. My favorite scenario is that this is a more concerted exhaustion low. Even if you get weakness, you don't want to see anything past 60. Look for a pivot and close back above 62. And we'd look to reassert a more bullish, constructive outlook, here's what it looks like here on Aussie for the daily chart. All things held constant, we're kind of poised to post an outside day reversal today. Not the most bullish thing, okay? Again, if we're getting higher on, if we're going to go higher on this advance, you want to see support at 60. Don't want to see intraday drop below 60. Here's what it looks like on the scalp, and here's what we look like on Aussie earlier into the weekly open. Okay, we were opening at resistance, and I noted last week that we popped right above 61.81, that level that we noted, and then closed the week just below it. So for me, it's exactly what I just told you right here. Right? It rallied into resistance and closed below it. What do you do? Right? What do you do? I'm bullish, but I'm not going to take a long into resistance. I expect a pullback, but we're still in uptrend support. Now, truth be told, you could have gotten away with a short, but even if you did, I would have been out right here at 60.78. Okay, that's a nice pivot in price, former swing high. That's slope support. That's the level that we noted, earlier in the week, right here. Bullish inval I had at 60.22, right here. Friday's low converged on slope into the start of the week. Here's the weekly opening range just setting up below 61.80. Choke this up. Don't mind that. And we're at a weekly opening range above slope support. Okay. If we see a downside break, and again, this is assumption that this is a high, very big assumption that we don't necessarily want to make right now. But if we do break this low, I'd be comfortable working with this retracement, looking for targets into 59.40. Big support essentially comes in at 57.80s, I want to say. Is 6180s down here. I don't want to stress last week's open per se, but this zone, you can see former resistance and just real tight zone there into the 58, 57, 76 zone. Not my favorite scenario. My favorite scenario is to see a little bit of a break here, maybe a stronger pullback, but I'd be looking for that pullback to be limited. Okay, ideally to the 60 handle. Just don't know if this end of month flow is going to mess with me, so could get a fake out move. I don't know. Above 62.35, right on course 63.41. And I think there's a lot more upside beyond that, but the big resistance zone for now would be the monthly open into that 786, 64.30 into 64.65. Any questions on Aussie? All right. Let's hit dollar Swiss real quick. We'll slam SPX, and then I'll take your questions. Sarab, welcome aboard. Let's take a look at real quick at Swissy. I didn't have much excitement about this. We wrote about this earlier in the week, or in the month, I should say. Last update on dollar Swiss was right here. And here's what we were looking at. The thing had kind of made a larger pullback after it broke this uptrend support off the monthly lows. There's the drop, came into slope support, literally right into slope support, into the close of last week. This is on the 26th. So into the open of this week, you're looking for some sort of reaction. Now we've adjusted this slope a little bit, okay? It's the same gradient essentially, but that turned out to be the 25% line. Long story short, guys, that level held, right? Here's the pull higher, 2020 open, objective yearly open, 96.71. We're testing that as resistance right now. All right, so if this downslope is preserved, we would be looking for exhaustion essentially right here. Weekly open support, I want to highlight that for you now, is right there. So I'd be looking at a move like this. Whoops. And that would be your near-term resumptive trade, right? I'll break below the weekly open and put you back on course for 94.57, 94.53. So not our most popular pair, but like I always say, when the levels are there, I'm gonna highlight them. Gonna highlight them. This is a good spot. Let's dollar Swissy on the weekly, on the daily chart. And I mean, the weekly chart hasn't been really that impressive, but nonetheless, last year's low, right? Boom. Okay, so that is dollar Swiss right along. That was number 8. Okay, number 9. Pete, you with me? SPX. So here's my take on things, man. Obviously, I'm not going to say the same spiel again, but I will. End of month, end of quarter, expect the unexpected. That said, that said, you see this slope, remember this slope, the same slope we've been following since 2009, 2011 lows. I believe this is the 618, right? Yeah. So the 618 parallel of that slope was almost touched as resistance. It's kind of capped the advance. The big lateral level, 2671, even if you get a stretch into that, you're still kind of testing downtrend resistance. So guys, I'm going to delete this for a second. Again, I showed you this yesterday, but if we clean this up for a moment, if this pitchfork is in play, you can't rule out a test even as high as like 27 and change here, Pete. You know what I mean? Intro week, wouldn't put it past this thing. End of month, end of quarter. Yeah, why not? But I'm essentially still looking for exhaustion. Essentially still looking for exhaustion. I don't think it's out of the realm of possibility to see another test of 24.12 before all is said and done. Here's SPX. Well, let me bring that slope back before it disappears. Here's SPX on the daily charts. A basic 38.2 gives you 26.46. That's a level that we talked about last week on the recovery. That's still kind of preserved, right? 24.97 last year's open. Here's 24.12, right? So on this recovery, is this pullback the extent of it? I don't know. Here's what I'm looking at on the intraday chart, and this is really what I'm determining. When you asked me earlier, gun to my head, SPX rolling over, do you think it has more upside? Thanks for your ideas. This is what I'm looking at, Pete, plain and simple. You're at median line support like right now. We pivoted along it perfectly yesterday. Once we pivot below was resistance. Once we pivot low, here's support. But this is your big zone of resistance immediately. It's 26.46 and 26.71. That's 2018 open and the 38.2. So I don't make any assumptions on this move at all. You're testing upslope resistance essentially. You could get a pullback into this zone. It would still be constructive. Eventually, I think you kind of still turn over. That's just my opinion. All things held constant, you're at resistance. If this thing pops through 26.71, I'd be looking for a resumption, period. But below that zone, in my humble opinion, could be a little bit more of a risky move. And again, Pete, if it weren't for the timing of the month and quarter, I'd be a lot more aggressive on this, but too much event risk, too many headlines going around, and timing, tough. Pete, does that help? Does that make sense? Thanks, Mike. I understand. More than welcome, man. Again, I'm usually super excited about that setup with you when it's clear, but I just don't trust what we'll see today. I mean, even if this thing slams down here, the old Boutros would be like, yeah, let's definitely fade that move. You got to stop against that low, fade it for a little bit of a bounce. I'd play the range, right? And if it breaks into this region early into the US trade session, pulls back and tests again, you have a test against the high, I'd short that for a move into slope support. But with this market condition, it could do that move 3 times and then still double back. So a little bit more on the safer side here into the close of the month. Okay, so that's everything we wanted to cover here. Sarub, you had some interesting setups you wanted to go over. Let me look over silver first. I think I have something there. Okay. Not really a trade I typically follow or have followed regularly for some time, but let's take a look for you. See where you're at. So here's my silver weekly chart. Okay. Um, I mean, I haven't updated this. I guess you could have just worked with this since last year and it still would have been clean. Here's your 2019 open. Here's the 2020 open. So essentially, your monthly opening range resolved to the downside. Here's a 100% extension. So that's two equal legs off the decline from June, and the lower parallel. I'm not a big fan of this, to be quite honest with you. Hmm. So, Surab is it? I hope. I mean, yeah, this doesn't have much on it for me. Take a pistol to my head. I'd say look for it to pump higher one more time and look for another reaction in this zone. Below this, you're still at risk. Last year's open was 1547. You've not only broken upslope support, you've broken downslope support. The median line rests here. Um, Here's your yearly open. It's got to be the same slope. There's not really much to do beyond that. Yeah, I don't see a trade here for me, Sarup. So listen, I want to encourage you to bring me as many trade ideas as you guys see fit. But one of the things I see as my job is to look at it. And if I don't see something, guys, I'm not going to sugarcoat it and try to draw you a picture of this is what's possibly this. I don't see something here for me. If and I don't like working with ifs. I'm completely honest with you. But if this were to rip higher and show you failure at that median line, if there was a fib there, former slope support, okay, but it's only a 2-point touch, so I'm not going crazy with it. If we were to get a reaction there, sure, you'd probably look for a short side move. Markets are, not really on a firm footing, I'd say. We're looking at a recession ahead for sure in the cards. Yeah, I'd rather be on the short side if it spikes higher. But is there a setup for me right here and now? No. I'll spend some more time on this weekend. I'll see if I can dig deeper into the levels, but even price action is just not all that pretty. The other thing you wanted to take a look at was crude. And crude, I do have an opinion on, and my opinion is not necessarily that we don't know what's going to happen. It's just not to touch it here because of where we are. So let me take the log scale off here. Here's crude on the weekly chart. Really important chart, Sarub. I think it's very important to kind of watch this. For the last 3 weeks, we've been talking about a possible slope that we added this year. I had no, inclination of whether we wanted to operate or not, but what we saw here around the median line was pretty clean early in the year with the break. We tested resistance. Again, on a closed basis, we're looking here on the weekly chart. Break below, tested as resistance, right? Held, plummeted through. All the upslopes that we were working with off the 2015, 2016, those all got broken. Break saw acceleration, break saw acceleration, downslope, support. This is this 25% line, or you see it here represented in the pitchfork in the system as the 50 line, but it's the 25% line of the pitchfork. And for the last 3 weeks, essentially, we're still kind of struggling to do anything at that low. You don't want to be the guy trying. Can I call you by your last name? It's a pretty cool last name, Killa. um, you don't want to be the guy kind of trying to catch the low, to catch a fallen knife. But if you put a pistol to my head, I'd say watch out here. You know, my next downside target is 1670. We're in a radical, insane market environment. We just covered what, a 70% drop in what, 3 months? Give me a break. Wouldn't put it past this thing to ram lower into 1670 and then recover. Intra-week maybe, but I want to see that slope recovered if it's going to see a recovery in general on a weekly close basis. But that's my issue with crude. You know, I know what levels to look for. Do you want to take the bounce off that level? I'd rather watch this thing recover back towards 29 and fail miserably, take a short. But you don't want to get too aggressive on this here. So with that in mind, Killa, on the long term, right? Looking at this from the weekly chart, when you look at it on the intraday and you start to drill down deeper on crude, here's oil on the daily chart, right? Again, the same thing. You've seen that we've broken all sorts of downslope support. This is a different slope just off the high from 2018, right? Either way you slice it, you're basically holding that same gradient. Intraday, looking at the 2-hour chart, here's what I was working with last week. I don't remember who asked about this in the webinars, but we took the same slope that we've been working with. The parallels off that have been exquisite, okay? Break, acceleration. And this is something I always try to remind you guys, even when you see a break of a trend line, you want to study that to also give you a tell on whether that gradient is holding any merits whatsoever. So again, the break, we took that same gradient off of some lows way back here into this close of December, right? Still holding. So look, man, you're not quite at slope support. I do think the longer term slope there is going to offer some sort of rebound. I'm not going to be the one trying to call low on this thing. I can tell you if we fade or if we drop into that next downside target, like the only thing I have on tap is in the 16 zone, 1670. If we drop into that 2011 low, sure, maybe there look for a rebound, but not something that's on the menu for me. Last but not least, you're looking for the Dow, right? So here's the Dow Jones Industrial Average, not something I usually cover at all. So I will have to kind of rework those levels for you. Let me see if I have anything in my other setup here. So right off the bat, some things that would kind of draw my attention near term, just coming out of the woodwork. And again, this is the first time I look at this chart from an intraday standpoint for you. And we have no way of knowing that this is a high, but just if we do crack that median line, I'd be looking at this. Yeah, it's gonna be determined on time, but I'd be looking for a move into like this zone here, maybe 2040. Excuse me, 20, yeah, 20,400. It'll be 50 the advance. Look at the pivot. Take my cursor. Look to the left. Former swing lows there. Nice decent pivot in price. Breakout saw a break of this exact lateral level and test of support before the continuation higher. 2253. It's not so much that necessarily that it's just a 38.2. It's also a slope at this point. It was slope back here too. It's slope right now. So if we get through this, you're exposed 2388 on a breakout. Again, I'm not buying that, all is well and done with stocks and that we're on the road to recovery just yet, but that would be the top side exposure if we do break 2250, 22,530 at this point on the upside. But some levels to reference there for you, Killa. A little bit cleaner here than on on crude, I'll tell you that much. Or silver for that matter. All right. I hope that helps. Any other questions or trade setups you guys want to review? Yeah, typically, guys, I don't even do these webinars on the last day of the month just because I know I'm kind of hands off. But I really just want to caution you. If the setup is there, your risk tolerance is there, and the proper, parameters are there, go ahead. I don't want to hold you back. But that being said, expect some, gyrations that may throw you off. Just be cautious, lighten the load, and we're in for an awesome month if things are going to keep up the way they are. You got non-farm payrolls on Friday. Again, we'll go over the whole kit and caboodle on Thursday's webinar. We'll get you all ready for non-farm payrolls, going over all the dollar crosses and where we stand. It's the first couple of days of April trade. Till then, best of luck trading, guys, and I will see you on Thursday. Cheers.